I'm Dr. B, and yes, I'm a real ER doctor. So you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse.
Action.
Welcome to the Market Pulse. I'm Dr. B here at Verified Investing, and today we're going to be discussing trailing stop losses. Okay, so this is an important episode to discuss how to tactfully take profits on a trade and continually move your stop losses up in the money so that you're locking in profits. Let's get to the charts. All right, so the first chart we're going to be taking a look at is UPST. All right, so several of you have asked about trailing stop losses in the past, and really there's two ways to use trailing stops. There's automated trailing stops, which you can put into your brokerage account, or there's manual trailing stops. And within manual trailing stops, which we'll be focusing on today, there's two types of two ways to use manual trailing stops that I know of, okay? The first is to use a simple trend line here. The second is to use higher lows or lower highs, right? In this case, you have a stock that's uptrending here, and you can see that very clearly. You know, you have a trend line, and this is probably what I would use for this stock, you know, to use a manual trailing stop. I was looking at this chart this morning. You can see there was a little wedge pattern that UPST broke out of, or a little falling channel, little double bottom here, okay? And let's say that you bought the breakout here of this falling channel, and you were wondering where to put your stop. So let's say that you bought here and you put your stop right here below the lows of the day. All right, that's a great way to start. And then a lot of people ask, okay, well, how do I move my stop up? Where am I looking for, right? So as you can see here, you know, one way you can do it is you can draw a trend line here and just run your stop up along this line, okay? That's more conservative, and that works very well. Obviously, you would have stopped out right about there. But what's a little more liberal, allowing the trade to play out over a longer period of time, is, you know, wait for a trend line to develop, okay? You know that this is a big pivot low because you've had a major run here. And now what you're looking for is the pullback, right? Almost always you'll see a pullback, then a move higher, a pullback, move higher. And so as soon as you start to see a trend line, a very clear trend line that's developed, that's where you can start to basically to implement the manual trailing stop strategy. So let's say that you've identified this pivot low, this is your pivot high here, this is your pivot low, right? Your stop is still here, okay? You're in the money nicely, all right? So what you can do here is wait for this, you know, if it bounces, now all of a sudden you have this pivot low, and now you have a trend line. One pivot low, two pivot lows, there's your trend line, there's your slope. Okay, so you know that in general, price will likely ride along this trend line, you know, until it breaks. One thing you have to be careful of is pierces of this trend line. Okay, if you pierce this trend line, you can take your stop out. So what you can do is give your stop a little room to breathe. Instead of putting it, you know, right here, right below, you might decide to put it, say, right here, or right here, okay, or right here. And basically the idea is, with a trailing stop, is to get the maximum move out of a stock. And you can see that if you use the manual trailing stop on this stock today, you would have stopped out right about here, and you would have maximized your gains on this stock, right? So very, very important. We talked about simple trend line breakouts and breakdowns last episode, but this is kind of converging the two and showing you how to utilize those, not only to enter a trade, but now where to exit the trade based on manual stops. All right, so this is an awesome technique if this is the way you would like to trade. So let's move on to the next one. We're going to be discussing ARM, and ARM had a Similar type of falling wedge breakout. Okay, let's say that you decided to enter here on the breakout and you were putting your stop here at the lows of the day. Again, you have a nice trend line that developed on ARM, and you could have just, again, moved your stop up along the way, and you would have been stopped out right here, maximizing your gain. This was the high of the bounce. And again, it doesn't always work out this way. Sometimes you'll break out. Let's say that you haven't put your stop. Let's say you haven't created a trend line yet, and you start to break down. You can take your stop out here, right, from over here, and go from taking a win to a loss. Sometimes that happens, but if you have your stop right here, that actually prevents you from taking a large loss, and you can always re-enter, if it falls lower. So that was ARM. This was this morning. We were taking a look at this. We actually traded this. Apple is another chart I was looking at this morning. Now, what's interesting, we saw trend lines on UPST and ARM, but here on Apple, here was the lows of the day so far, and you can see that, yes, while there is a trend line, there's actually these nice higher lows, right? So these nice higher lows give you the opportunity to, again, also another way to use your manual trailing stops. You can see if you were to draw a trend line here, you would have been stopped out right here. But had you waited for these higher lows to develop, all right, and a lot of this is some of this is hindsight, some of this is practice, some of this is understanding, how the stock is moving. But had you used this technique, you really would have maximized your gains. You would have been stopped out right here, right? Because you would have stop, moving your stop up here, moving your stop up here, and you would have been stopped out, right in this area. So, let's say that you entered here on the break here of these wick highs, you would have had a nice profit from here to here. So, and this is all on the 1 minute chart that I'm showing you, but I'm going to flip over to the daily chart on Tesla. And let's say that you're more of a swing trader, all right? There are swing traders, day traders, all sorts of types of traders, investors who may be watching this. But let's say that you're on the daily chart on Tesla, and you say, wow, this is a pretty big drop in Tesla after a pretty large move up, right? Well, I'm going to start to short the stock. Let's say that you short, let's say that you decide to short right here, okay, or very close to here. Let's say right here is where you enter, just to be clear. All right, so there's your entry. And let's say that you decide to use trailing stops, all right, manual trailing stops. There was a pivot low or a pivot high here. Yes, pivot high here, pivot high here. So you probably would have stopped out right in this area. That's awesome. That's a nice gain. And then let's say you decided to re-enter it, noticing that, again, the stock was putting in a lower high compared to this high and this high. And let's say you decided to re-enter, again, right here on the close of this candle. You can put your stop here, 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 and eventually, let's say here or here, and you would have been stopped out somewhere in this area, maximizing your gain from here to here. This takes a little while. This happened over several months, but it can definitely be, utilized on any time frame, the 1 minute all the way up to, the monthly time frame. So definitely something to understand. And let's take the last example here on Bitcoin, where you see this is the weekly chart. And let's say that you were lucky enough to load a nice big long position right in this area. And let's say you entered, right here, okay? And your stop went right there. Where would you have put your stops next? Well, this pivot low, this pivot low. What happened here? You probably got stopped out right, actually, nope, it's about even. So you wouldn't have gotten stopped out there. So here's your stop. Now you would have moved it here, seeing the price move higher. Here's your next stop. Here's your next stop. You would have been stopped out right here on Bitcoin. So buying around, let's say 18,000 on Bitcoin and getting stopped out somewhere around 54,000 on Bitcoin. So a huge gain just using this manual trailing stop strategy. And it's very powerful because it's objective. It uses technical analysis, trend lines, higher lows, lower highs, right? These are all fundamental concepts in the world of technical analysis. It gives you the overall trend of a stock, if it's trending up or down. And that's generally how stocks move, right? They move higher, they pull back a little bit, move higher, pull back, move higher. That's an uptrend. And then when you start to downtrend, it does the same thing in general. So you can use those pivots to your advantage as to where, to put your stop losses to kind of maximize your gain and let that stock, run or fall the most it possibly can. So I hope you enjoyed that. So I hope you enjoyed that episode. Next, we'll be talking about the automated trailing stops that let's restart. I hope you enjoyed that. Next episode, we'll be discussing the automated trailing stops that you have, that you can program on your brokerage accounts. And there's a slight difference between the two, but it is an important difference. And again, check us out, verifiedinvesting.com. I teach a course, I have a course online called the 1 Minute Scalpel. I go through some of these concepts in the 1 Minute Scalpel, showing you where I enter, where I exit, where I'm putting my stops, where I'm looking to take profits, etc. And then shortly I'll have a VWAP course as well. So very excited to come out with that. And again, thanks for watching. We'll see you next week. Take care.